Welcome to our channel, and more importantly, welcome to our free weekly stock market breakdown, which is released every Sunday at 2 p.m. Eastern Standard Time. In these breakdowns, we will cover the latest news developments that will affect the market, as well as break down the broad market and other instruments for opportunities that may be brewing this upcoming week. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content, and also remember to turn on our channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All important links to our channels are in the description below. Let's get right into it. So starting off today, we're going to be looking at some fundamental analysis as well as some technical analysis relating to the markets. But first, let's kick it off with some of the news that's going on this week, or that has happened this week. So the first thing I'm going to talk about is that Trump flip-flopping on his stimulus talks. So first, earlier in the week, he spoke about delaying the stimulus talks and advised Senate Republicans to stop negotiating with the Democrats, but recognizing that this was not a smart move, causing the markets to sell off, he released another tweet that basically said, hey, let's start negotiating. Actually, we're going to make it bigger. So here we have Business Insider covering this story, saying that they're basically going to up, or the Republicans are going to up what they were asking, or they were offering at first, which was 1.6 trillion. So now they're at 1.8 trillion, which is closing the gap to the 2.2 trillion that the Democrats are asking for. This contains $1,200 direct payments as well as $400 weekly federal unemployment benefits. So it's good to see that things are getting better, and it's looking better that a stimulus may pass either before the election or slightly after the election. The second news story we're going to cover is Jerome Powell, basically the head of the Federal Reserve, saying that he is advising that they pass a stimulus. So this is all heading in the right direction. You know, he said that there's not much risk overdoing it, and that the risk is very small, as we see highlighted here. And basically, he's going to support whatever stimulus measures the US government will pass, as the Federal Reserve is only responsible for monetary policy, and only the government can pass fiscal policy. So moving on to the next news story is obviously that the markets are starting to price in the fact that the Democrats may win both the Senate and the presidency. So this isn't a bad thing. It's actually a good thing, because the Democrats are a lot further ahead in terms of stimulus, how much money they want to give to the markets. So the markets are pricing this in, or beginning to price this in, because they know that the Democrats are going to put as much money into people's pockets and into the markets as they possibly can. Definitely in the short term. In the long term, obviously they're looking at raising taxes, but right now the markets ain't worrying about that. They're only worrying about the fact that there's going to be money coming into the market. So now we've covered some of the news stories. Let's get into some of the technical analysis that may be going on in the markets. So here I'm looking at the S&P 500. As you can see, looking at the daily chart, we've been in a steady uptrend, which I will highlight now. Here are our two uptrend lines that we had actually a breakout of this uptrend, signaling that there may be a sell-off, but the markets quickly recovered, selling in a bottom here around 3,200, the 3,200 level, and now we're starting to see the daily candle break back above into this uptrend line. So this is a very bullish thing that has occurred, and we can expect hopefully to see more push to the upside, maybe even to all-time highs. So I'm actually going to draw in my support and resistance levels that I've been looking at. I have my zone here in red between the 3,200 level and about the 3,250 level that marks our major supply and demand zone that we have here. And you can see we got a nice bounce off of it. We came up back above the 50 period moving average, which is sort of this red orange line. We had a retest of that moving average, and now we've broken back into the zone. So the only thing I'm looking for now is for us possibly to head up a little bit higher, retest the line, and then continue up possibly to the top of this trend. That would be what I am looking for, and I'll be looking for an entry opportunity on the lower time frames for this. So if I drop home down to the 4 hour, as you'll see, there's another zone here. I actually analyzed this on the 1 hour because it's a little bit easier to see. But as you can see, we had another supply and demand zone right here. At about the 3,400 level, which was the other critical level. We got a retest of that level, and so our late entry into this move will actually be up here once we break above this about 3,700 level, 3,800 level. So once we get a retest of this zone, and hopefully a retest of this uptrend line on the daily, then we'll be looking to take our trades all the way back up to the top of this zone. As a conservative approach, we'll probably be looking at the previous highs, so we may take something off the table off at the previous highs. But either way, this gives us quite a sizable risk to reward ratio on the S&P 500. If we have our stop loss just below the two support zones, the one right here as well as the one below the trend line, then we could be looking anywhere between a 4 to 5 risk to reward ratio, depending on how tight your stop loss is. So all of the trade ideas that I'm mentioning in this segment of the video are for short-term trades only, not for anything long-term, just because there's a lot of things that are going on fundamentally that don't line up with the market right now. Sometimes the market doesn't follow logic, but we're still able to capitalize in these opportunities while it isn't functioning properly. And so these aren't any trades that I'll be holding on a long-term basis, just quick in and out the markets, maybe 1 month, even a month to a day long trade ideas. But this is just my overall outlook on what I think is going to be happening in the short term. So let's move on to the next index that we're going to look at, and that's going to be the NASDAQ. Let me drop back down to the daily chart just so you can see what has happened. So as you can see, we've been in a huge sustained bull market, easily surpassing all-time highs from March, and we've actually gone to touch up above the 12,000 level before we had a big sell-off. It's not coincidental that the sell-off happened at a big even like 12,000. Usually the markets react to big levels like this. So let me go in and add in my trend lines that I have supporting this rally that we've been in. And as you can see, we've been in a pretty controlled uptrend before we had this massive sell-off back on the 2nd of September. And now we've comfortably and easily bounced off the bottom of this trend, which started actually back from the 23rd of March at the lows. And now we're pushing up higher, back above the 50 and the 20 and even the 8, which are the 3 of the major moving averages that I look at, exponential moving averages. And now I'm going to draw in my zones just so you can see what trading opportunities may be occurring. So the first major zone that I see is here at the 10,700 level. As you can see, we did break below it slightly. If I drop to Japanese candlesticks, you can see we sort of bounced in this region before we gapped up the following day and continued to sustain uptrend. The reason why I use Heikin-Ashi candles is because it blurs out the noise when I'm drawing in these zones and looking for opportunities. But I do not execute my trades on Heikin-Ashi candles. I only use it for analysis. I execute my trades using Japanese candlesticks. So if I drop down to the 4 hour, you can see a lot easier this zone that I had. There was no retest of the zone, so that's kind of odd. But the markets don't function rationally, and it was a gap up that got us up here. Will we come back down to retest the zone? Not too sure, but for now we're rallying up, and I don't think that this rally is going to stop for now. Dropping down to the 1 hour, let's see what trading opportunities may be. Some short-term trading opportunities may be around. So the first zone I see is right here around the 11,300 level, which we haven't seen a retest of as yet. Honestly, I'm not really, now I'm looking at it now, I'm not going to take any trades from the NASDAQ just because we haven't retested any major levels that I'd be comfortable with. So if I was going to trade this, I'd be looking for a pullback into this zone, maybe even further to retest this trend line and get a pushback up. But who knows? You never know what the market's going to do. It's better to be reactive than try and guess what the market's going to do next. But using my trading strategy, I don't enter trades unless I get a good retest of a significant level. So that's what I would be waiting for, is the bounce off of here and then the continuation upwards, possibly to the top of this trend. But as a conservative approach, I'd be targeting the next supply and demand zone, which based on my analysis would be this level right here, which funny enough lines up to the highs that we're at right now, which would explain why we are getting resistance here right now. So either way, if this does occur, we're looking at around a 2.2 to 1 risk to reward ratio. So not as favorable as the NASDAQ, as the S&P 500, but still a valid trading opportunity. The fact that the government is looking at giving another round of stimulus and the Fed is supporting it and it looks like it will pass will give us a high chance, or a good chance rather, of these trade ideas playing out, sending the markets higher, and at the end of the day making us money. So moving on to the world's favorite commodity that everybody loves to trade, both hedge funds, institutional traders, as well as currency traders love to trade in the gold market. So there's a lot of interesting things that have been happening in the gold market. I won't get into them fully in this video. I'll save that for another video where I do a full breakdown of where my long-term gold targets are. But for the short term, we've definitely seen quite a complex correction pattern happen here, and I'm going to analyze it now. But we've just broken above quite a clear level of support here on the 4-hour chart, and this is a very, very bullish thing because we had a breakdown below it, and then price immediately had a rejection, set in an uptrend, and broke back above this zone. So this pattern here that I'm highlighting is actually a common pattern that I use to indicate when there may be a huge move to the upside. And this is a huge fake out pattern, as well as a cup and handle, as you can see here, kind of looks like a cup. And we've just had a break above this significant level of support on the 4-hour chart. So definitely looking at a bullish bias in gold. And this is supported by the news, which is saying that there's going to be more stimulus. So more stimulus means more money printing, which means that gold heads higher. And the reasons for that will be explained in my next video that I'll do on gold. But definitely looking at long-term, or short-term rather, targets on gold are going to be this resistance level right here. This was a major resistance level that everybody was looking at when we was here in this area, and a break above this. You see we got a fake out and then we got pushed straight back below it. We got resistance above it here back around the 30th of August, and we rejected it here again. So my short-term target for gold, lovely trading opportunity. Need to have quite a decent stop loss because it's gold and it loves to be very volatile, but it still gives us around a 3.5 to 1 risk to reward ratio, which is very, 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 very favorable. We just have to be patient in ensuring that we don't take any premature trades and get in at a bad area. So what I'll be looking for is a clear pullback into this zone and then a push up. To get even a little bit more technical, I look at certain fib retracements that I'll be looking at to optimize my entry, and I love to use the between the 382 to the 618 level fib retracement. And so if I line up this fib line to the top of the trend and I line this up to where we had the latest pullback, we're looking at a 382 pullback that's going to be approximately at the bottom of this zone, so 1911. Make sure our stop loss is below the 618, and this gives us an even better risk to reward ratio. But to be quite honest, it looks like gold is going to push up a little bit higher before having a clear retest on the zone. And just reminding you, we're looking for a 4-hour retest, not a 1 hour, just because of how significant this zone has been. And the more significant a zone is, the higher level time frame of a retest you want to look for. So if this continues higher, possibly even to 1940 before we get a retracement, that'll be line up to approximately the top of our zone. And so we're gonna want to be watching this and only getting in on the retest, because like I said, gold likes to be volatile and shake out everybody, and so you have to trade it smart. So this concludes our first ever market breakdown on the Financial Progression channel. Thank you to all who took the time out to watch the video, whether it be in part or the entirety of it. I aim to continue to develop these videos and bring even higher quality content to the channel in the coming weeks and months. I will also be posting educational content on the channel that is suitable for both beginner and experienced level traders. If you haven't already, help us out by dropping a like on the video and subscribe to the channel so that you don't miss out on any of our future videos. Thanks and peace out.